Right, so the big press conference by the three top guns of the Modi government, the finance minister, the commerce minister and the information and broadcasting minister. So the big takeaway is that on 54 items, from air conditioners to two-wheelers to passenger vehicles, the government is saying that there is significant cost reduction as a result of GST tax rate rationalization that is being passed on, and that is leading to increased sales. I want to go across to Ajay Dua, former Commerce Secretary, and Ajay Bagga, market expert, joining us. Mr. Dua, so the government is making the case that, because of the GST rate rationalization, bringing it down to, 5% and 18%, it is basically now allowing for a significant uptick in sales, whether it's on white goods like air conditioners, televisions, etc., smartphones, and also at the same time, movement of two and four-wheelers. Do you reckon that this is just a temporary bump because of the festive season, or will this be a little more secular in its uptick and therefore change consumption patterns? A question was asked to the finance minister as well. She said it's too early to say. But do you think that this is now setting the stage for further uptick in sales of consumer goods, as well as, leading to greater consumption by the Indian consumer?
Thank you, Mr. Zaka. I think the answer is partly already given by you, that yes, low taxation rates have coincided with the festival season. So part of it is the effect of the higher consumption, which usually occurs in India during the 7 or 8 weeks, starting from middle of August and stretching on into the middle of October or so till the Diwali is over. So almost 8 weeks. And this time, from the 22nd of September, we have seen the actual lowering of taxes, GST indirect taxes, but the announcement was made on the 2nd of September. So there would be a little bit of pent-up demand, because people were told that from the 22nd September, the new tax rates will come into force, and even the rates had been announced. On the 15th of August, probably the Prime Minister gave an indication only that the GST rationalization is coming, and a lot of people would benefit from it. But having said that, I would say that to me it appears that if the rate of growth of the economy continues, we've had one good term, plus 7% plus rate of growth there. The second quarter also should be good, with the festival season experiencing the kind of changes which have today been mentioned by the three ministers. I think if the consumption is increasing, our exports have not fallen because of the tantrums of the US administration.
Okay.
It is going to be a trend which could be maintained in the years to come, and that is shown by the results or the data which has come out both for August, where we had a 6 to 7% increase in exports, which has been sustained and actually made a little more in the month of September, by looking at our diversification. I'm referring to that diversification to new markets. China has started buying iron ore again from us.
Yes.
UAE, with which we had earlier early harvest treaty, thereafter a full-fledged, we are seeing such buoyancy that it has become our number one trading partner. So with these kind of things happening consistently, if they happen over 2 or 3 months, and I do think we are heading for that, then there is no reason why the effect of...
Let me also ask Mr. Bagga about this, because this increase in consumption because of, the decreased rates and the rationalization of the GST rates is also coming at a time when the headwinds born out of the Trump tariffs, the fact that India is one of the major economies that's not clinched its sort of trade deal with the United States. Do you think this consumption story mitigates some of the pain? I think the numbers for September, the export numbers for September are showing a slight uptick, as Mr. Dua was saying, but there is some degree of pain that's being felt by, textile exporters, gems and jewelry exporters, particularly those who have a large exposure to the US market. So, Mr. Bagga, do you think that this would mitigate that? And are we seeing this in the Q2 numbers that corporate India has also been releasing over the last few weeks?
Yeah, Zaka, difficult to say because still we are waiting for the major consumer companies to report their numbers. But if you look at the high frequency indicators, which are what we call leading indicators, which give you an idea of where the economy is going, those are looking quite strong, much better than the June quarter. September quarter already there is a recovery, and we are expecting this festive season to be a blockbuster. So nearly about 14 lakh crores of consumption is expected, Zaka. 48 lakh marriages are going to happen in India in November and December. So, our numbers are just so huge that it leads to a big consumption boost. On that, if you add these GST cuts, it helps a lot. And it's classical economics, Zaka. What happens? We have the Laffer's curve in economics where it shows scientifically that as you cut rates up to a limit, you will not lose revenues because that cut in taxes leads to higher consumption. So the government has just started on that after 8-9 years of GST. First time we are seeing this kind of massive rationalization. I would say more is needed. We are still a very high taxed country. More will be required, but you will be surprised that instead of that 48,000 crores of losses, which the bureaucrats had penciled in because of the GST cuts, we will actually see a gain in the GST collections. August already has shown a 9% growth. We are waiting for the September numbers for GST. Again, not like to like because of Diwali. Where does Diwali fall in? The numbers change a bit. But if you take a 3 month indicator, we are quite okay, Zaka.
Okay, we'll leave it at that. Thank you very much, Mr. Bagga, Mr. Dua, for joining us and putting that into perspective for our viewers. We'll take a quick break here on the program, but on the other side, other news and updates continue in just a moment.